Today, I wanted to go over some housing market predictions from the big three names that most people think of when they're searching for houses. That's going to be Realtor.com, Zillow, and Redfin. And I wanted to go over some of these articles that have been published recently. So this first one I'm going to go over is from Redfin, and it was published about 8 days ago. So December 6th. As I'm recording this, it's actually December 14th of 2022. And I wanted to go over these housing predictions and give kind of my take on it as well. So basically what Redfin is saying, they came out with, I believe is 11 different predictions basically for 2023. The first one is that home sales will fall to their lowest level since 2011 with a slow recovery in the second half of the year. So home sales, that's the actual amount of houses that are selling, will be lower is what they're predicting. And that's not uncommon from what a lot of other major outlets are predicting as well. And that's partially just because the interest rates, obviously they've been rising, and that has been a concern for many. But really, I think from what I've been seeing, it's more so the rapid fluctuation and variation that has almost put people on pause or made them press pause because they're not sure what to expect. And that's whether they're buying or selling. So house sellers, of course, they are not very incentivized to sell when they possibly have an interest rate for their 30-year fixed rate mortgage at or below 3%. Whereas interest rates climbed about 6 weeks ago in the end of October up past 7.25. So it really was not going to incentivize homeowners to sell their existing properties and trade in their low mortgage rate for a higher one. That has come down pretty considerably. So as of earlier this week, I know we were at 6.3% for our interest rates, and that's just for your average 30-year fixed. Of course, you could buy down points to make that even lower. If you have a good credit score or a good DTI, that could be lower as well. So we definitely are making strides in the right direction. And I know that the inflation data came out yesterday and came out a little better than expected as well. So we are actually heading in the right direction. But that being said, house sales are still going to be lagging, especially my prediction is the first quarter basically of 2023 is going to be slower in real estate. So for many people, that is. But it will definitely pick up as the year progresses. After that, the prediction number 2 from Redfin is that mortgage rates will decline, ending the year below 6%. So they are saying that they expect 30-year fixed rate mortgage rates to be about 5.8% by the end of next year in 2023. Honestly, the way that I've been seeing things, I would not be surprised if we got to that number much sooner than anticipated. So I could see high fives, low sixes early to mid next year. And then I'm hoping for, 5.75, maybe even 5.5 by the end of next year. So this, again, not uncommon for many experts in the industry to predict a slow, gradual decline for mortgage rates for next year. Prediction number 3, home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures. So this, nationally, yes, I think that may be true. For where I live in Northeast Ohio, I really don't see a decline in home prices. We just do not have enough inventory or supply, and we're still seeing in our A and B neighborhoods houses going quickly and for above asking, as long as they're priced well. And the thing with asking too, so I don't like to always compare, okay, is it going above or below the asking price? But as far as year over year appreciation, I do expect us to still see an increase. It will likely slow down from what we've had over the past several years, of course, but we saw 18% plus for 2020 and 2021. 2022, I'll have to run the numbers, but last I checked, we were at like 10 or 11%. So, if we're half that and we're at 5 to 5.5% home price appreciation, I wouldn't be surprised. But that just means that the values of those houses are still going up. It's just not going up as rapidly as it was the past couple of years, which was not really the healthiest of housing markets, anyways. Prediction number 4: the Midwest and Northeast will hold up as the best overall market, or as hold up best as the overall market cools. And once again, that kind of goes back to this last point where home price growth is likely to fall, is what they said. That is likely true for the metro areas that saw the biggest run up over the past couple of years. So, for example, I always think back to Boise, Idaho, which I think in 2021 saw a 40% year over year increase for home values, and that's just not sustainable. And of course, at some point, not only is it going to slow down, but it might go negative then on a year over year basis, just because it went up so quickly. In the Midwest, and again, I'm in Northeast Ohio, I really don't see us seeing a big downtick in pricing. So I do think that this is probably accurate, as we're going to see the Midwest and Northeast hold up best, and that's just because they also went up slower than the Sun Belt or the coastal cities. Prediction 5: rents will fall, and many Gen Zers and young millennials will continue renting. I don't have too much of an opinion on that. I don't think rents will really fall significantly, just because, once again, they did go up, and it's funny to see Boise, Idaho. I kind of got distracted there. They did go up over the past couple of years, but rent prices typically do go up. It's just how much did they go up, and will it decrease year over year? If it does, that just means that you're down 2023 versus 2022. But depending on when you bought that property or when you started renting it out, I bet your 2023 rents are still going to be higher than your 2021, 2020, 2019, so on and so forth. So rents usually do continue to go up. Prediction 6: builders will focus on multifamily rentals. That's been the case for the past year, so I see that continuing. Prediction 7: investor activity will bottom out in the spring, then rebound. I'm actually seeing the opposite. So that's one area that I disagree with Redfin here. Sure, the iBuying is decreasing because every iBuyer is getting crushed in many markets, but especially in markets that aren't homogenous. But like, you saw Zillow bow out because they lost $800 million in 2021. So they bowed out early 2022. Redfin just shut down their iBuying program. Opendoor lost, I think it was nearly $1 billion just in Q3 of 2022. And then in addition to Opendoor, what's the other one? It's similar. It's another Open something, but they are, or OfferPad was that one. They are actually being talked about no longer being publicly traded because their shares are trading for less than $1 per share. So they're going to be delisted from the stock market because they haven't been doing well either. So iBuying is down. I've seen investors get more aggressive because there's fewer buyers looking for primary residences. I've seen investors get aggressive, whether they're cash buyers, because really they didn't care when interest rates were at 7% if they're paying cash, or whether they're trying to do some creative financing deals. So that's one thing, or one area that I see a difference in our predictions. Prediction 8: Gen Zers will seek jobs in apartments in relatively affordable mid-tier cities. Once again, I can see that happening, and being a Northeast Ohio native and realtor, I can definitely welcome that, where hopefully they're coming to Cleveland. Prediction 9: migration from one part of the country to another will ease from the pandemic boom. Of course, pandemic started, people were working from home like crazy. That tune has gradually shifted, where they're maybe doing hybrid work from home. So I could see not as many people moving from one part of the country to another, just because that was kind of at like all-time highs previously. Prediction 10, rising disaster insurance costs will make extremely climate risky homes even more expensive. And that's been in the news for a while. Basically, with the hurricanes, with forest fires, with all of these different areas that are a little more risky in terms of being affected by climate change, that those areas are seeing their insurance costs go through the roof, and sometimes insurance providers are actually just leaving the state, is what I've heard. So that's been a topic that I don't want to get too much into, just because I'm not the expert on that as of right now. Um, Prediction number 11, more cities will follow Minneapolis in their yes in my backyard example to curb housing expenses. Basically, what they're saying for their zoning, instead of just having single family residential, or you could have basically areas where you could have houses that have to be on quarter acre lots, or 1 acre lots, or have so many feet of frontage, or other areas that you could have multi-unit family properties. Minneapolis, just to make sure that they're getting their house prices under control, they were allowing people to add ADUs, which is like an additional dwelling unit, townhouses, multifamily buildings, and areas that were typically only allowed for single family zoning previously. So that helped to keep home prices under control, but it also helped to keep rent prices under control. And they are predicting that more cities will follow their example. I'm I'm wishy-washy on this, and the reason for that is because basically, yes, you don't want your housing prices to go crazy, but by the same token, like most people, they do, if they're homeowners, they do want their home values to continue going up. And how does your home value go up? Keeping it scarce. So if you are allowing more and more houses to be built, or additional dwelling units, or multifamily properties, a lot of people think that those are eyesores when they're in the middle of a single family, whether it's a subdivision or anything like that. So I don't know. Yes, more cities will follow that, but that's just because there's not very many cities that have followed it so far. I don't think that it's going to become widespread, especially since I think uh, between the interest rates and everything like that, I think we are starting to get home prices under control already. So I don't think that making this drastic of a move is going to be beneficial long term. And prediction 12, so this is the last prediction. Buyer's agent commissions will rise slightly as fewer agents broker fewer deals at lower prices. Most people don't know this, just because most people aren't in the industry, but we were starting to see commissions shrink over the past year plus, and that's basically because there were so many agents in the market. B, it was such a hot market that basically people were like, hey, if I just put it up on the MLS, I could take iPhone photos and it will sell. So they thought they didn't have to do that much work. They were willing to take a reduced commission and therefore offer a reduced commission to the other side as a result, because they're like, I don't have to work as hard to sell this house. Well, now it is becoming harder for people to sell houses. We are starting to see days on market tick up. And that's where, um, you know, you have to pay as a listing agent. I mean, really, you should have never been taking iPhone photos, but you have to pay for professional photography. You have to pay for different services. You have to pay to market and advertise the property properly, because you want to get it in front of as many buyers as possible. So there are more expenses on the list side, and it's harder to sell. And you also want to incentivize the buyer's agent. Not that buyer's agents should be looking at compensation to really drive where their buyers are looking. But if you're looking at somebody who is offering a 3% commission versus a 2.5% commission versus a 2% commission, and they all three houses fit within that buy box, why would the buyer's agent not be pushing towards the higher commission? Because as long as they're still doing their fiduciary duty to their client, then why should they not try to get paid a little more? So that's the last prediction. I don't think that it's going to go up noticeably, but I do think that it will go up a little. So this is a fairly long video. I am going to actually continue, but we're at the 16-minute mark. I'll try to put in the show notes or the comments below where you can actually find the next tab, which is going to be Zillow's housing market predictions. And before I skip to that one, I just want to show the home values for, this is all of Ohio. So for example, this median home price is lower than the areas that I typically serve, but $216,000, almost $217,000 is the average home price in Ohio. That went up nearly 12% year over year, which is pretty similar to where I primarily serve in Northeast Ohio, like the Cleveland area. But I believe I was at 10 to 11%, maybe it's 12%. But yeah, that's kind of what we're seeing here. And then as far as the market overview for the data they had from January 1st through October 31st, again, it is the middle of December, but usually they don't get their numbers in for November for another week or so. But basically, 43% of all houses this year sold over the asking price and 40% sold under the asking price. So, so about 7% sold basically right at, is that correct? No, that's 83%. 17% sold right at asking price. So that's just a little tidbit for your information there. So Zillow's housing predictions for 2023, they call them bold housing predictions. Not sure how bold these are. We'll go over them and I'll let you find out. So the Midwest to feature front and center in 2023. Same thing as what Redfin was saying. Basically, Midwest is going to be very strong. So it says enter the Midwest as far as healthy housing markets. Unlike nearly every other region in the U.S., prices in most Midwest metro areas haven't run up to extremes. Mortgage costs as a share of income are still within healthy sub 30% levels across Ohio. Woohoo, go Ohio. Pennsylvania, Kansas, upstate New York, Iowa, and smaller metros in Illinois, which will allow first-time homebuyers to take a plunge. So basically they're saying Midwest, they're going to say that that is a hot housing market there. Buying with friends and family will gain momentum. Again, that probably just has to do with housing affordability being basically unaffordable the past year as interest rates went crazy. But yeah, people partnering up to buy a house, they're thinking that that's going to actually go up in 2023. The affordability crisis will stabilize, if not improve. I agree with that, and I mostly agree with that because interest rates, once again, are likely to go down a little bit, and also house prices are not going to increase as much. So that's where I think housing affordability will go up or it will improve a little bit. The only area that I think that might not happen, because housing affordability is really based on three metrics. It's going to be interest rate, it's going to be based on the purchase price of the house, and it's also going to be based on your income, because that's how it's affordable, is what percentage of your income does it make up. We have seen income rise over the past couple of years, but the Fed has been talking about potential recession, like a job loss recession. So that's the only area where I could see, okay, it might, that number might decrease or slow down a little bit as well. Surge in first-time landlords in 2023, so they are expecting people to start getting into the rental property game, uh, and I welcome that. I actually invest in real estate, so if you are interested in investing in Northeast Ohio, let me know. I think it is the best way to become financially free or financially independent. And then new construction strength will be in rentals. So once again, Redfin also said that in their predictions. Again, I don't think that's really as much of a prediction. I've been hearing this for quite a while for new construction for rental properties, and at least most of this year. So apparently that's going to continue for next year. And then for Realtor.com, what I wanted to go over here. So I know that that was a quick one with Zillow, but they only had five five notes there compared to the 12 on Redfin. And for Realtor.com, what I actually wanted to go over was the uh, housing forecasts for the 100 largest U.S. metros, ranked as far as what they're predicting is going to be the best housing markets. So I looked at this previously. I'm always rooting for Ohio in general, but Toledo, Ohio, not too far from here. It comes in at number 10. Columbus, where my alma mater, OSU, is, comes in at 14. Cincinnati at 19. Dayton at 23. So once again, we're just showing that Ohio and the Midwest is going to likely be a hot area, and that was predicted by Zillow, Redfin, and now Realtor.com here. So Cleveland, Elyria is at 32. So this is my primary market, and they are saying that basically, if you look at this column and this column here, the sales change is the amount of sales. So we're going to hopefully have more sales in Cleveland next year. And then the price change, they are predicting an increase in price, which again, I actually said 5.5 or 5 to 5.5 earlier in the video. They're predicting 4.3. I could see that too, but and they are predicting almost 3% more sales for the upcoming year. So good news for Cleveland. And let's see, I thought Akron was around 60. Yeah, Akron's at 60. They are saying that home prices will go up nearly 4% this year, and that there's actually going to be about 1% fewer homes selling in the Akron area. So I'm just kind of curious to see. So Realtor.com is actually pretty bullish in that they don't have any markets going down, which is surprising because I would think that some of the coastal markets would decrease year over year, or some of the Sunbelt markets, but as you can see for the price change here, there is no negative. They do have far fewer sales in certain areas of California, Florida, Arizona. So maybe they're just thinking because supply is so low and demand is still partially there, that's going to keep prices afloat. But yeah, that's interesting. That would be a tough market to be a realtor in. If you have 30% fewer sales, there's just not a lot to go around. So happy to be here in Northeast Ohio. Again, my name's Caleb Barney. I'm a realtor with Russell Real Estate. And if you are interested in buying, selling, or investing in real estate, please reach out to me. I'd love to even chat with you, even if you're working with somebody else and you just want a second opinion. I'd be happy to do so, and trust me, I won't be stepping on any toes there or trying to lure you away. So feel free to reach out to me. Otherwise, have a great day.